Hello, everyone, and welcome to TradeFinder Live. It's great to be back with you all during this trading day and during trading hours. First and foremost, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States. Nothing is to be taken as personal investment advice. This is available on our website at all times, so please feel free to read this in detail at your leisure or take a screenshot of it now if you like. But again, that's the main point to take away. Appears to be out of a rotation out of tech, and can Nvidia step in and save the day? I'm interested to hear what Rob has to say about that. Of course, very excited to interact with you all. So at this moment in time, let's get the man of the hour. Rob, you out there?
I'm here, Zack. How are you? Happy Tuesday afternoon to you. Been a interesting start of the week, to say the least. As you mentioned, seems like there's a bit of market rotation going on. So let's get right to the charts and take a look at what's going on. As we take a look at the SBY, we talked about this and made a couple commentary posts at evotrader.com starting back last Wednesday, where we closed above 610. That was the resistance level. And one of our trading rules is you have to have a follow through or confirmation day because there's so many head fakes in the market. And if you wonder, well, why are there head fakes? Well, head fakes are designed to shake out weak hands, those that aren't committed. And people use those, the professional traders use those to either buy or sell, depending on which way the head fake is. And sure enough, on Thursday, we had the open at 610 and traded lower, but managed to pull back up, but no follow-through day. You have to have a higher close the next day for it to count as a follow-through day. So that didn't happen, and then Friday happened. Big move to the downside on Friday as it appears that, in my opinion, the Fed is between a rock and a hard place. What do they do now? The CPI report was at 3%. That's higher than they want, up from 2.8. They wanted to go down towards 2, not back up. And then we have weakening economic data coming in. The home builders sentiment was really bad. New home starts was bad. And I was opining on whether or not that's the first shoe to drop on the economy beginning to weaken under the weight of the previous Fed rate hikes. Now, what does the Fed do? Do they cut? They had already guided us to probably no cuts till the end of the year. The Fed fund futures have been pricing in a 25 basis point rate cut in December. And then when we started to get all the poor economic data coming in, we moved the cut to a 50-50 chance in October, and the Fed fund futures is pricing in 2, possibly 3 rate cuts this year. But is that logical? Why would the Fed cut rates in the signs of stubborn? Let's just call it stubborn. I'm tired of using the media's word sticky inflation. I don't think they're going to cut until inflation begins to turn and head back their way. So it puts the Fed in a point of what do we do? And I think when they're in between, they're going to do nothing. All eyes will be on the next Fed meeting to hear what they have to say. That's for sure. So then we came back to the same scenario after yesterday's close, or excuse me, after Friday's close, to see if we got a follow-through day on Monday yesterday, which we did. So a second lower close, that counts as a follow-through day on top of the fact that we closed below the 50-day moving average. And can we further cement that with another close lower today? We've traded down towards 590 at this moment. Let's just go ahead at this point and switch over to the live chart and see what's happened during the trading day. This will give a good opportunity to talk about what happened yesterday too, as far as the battle between retail and professional traders, investment managers. This is remarkably similar what's gone on today as to what happened yesterday. So if we condense the chart more, you can see down there, the Elliott wave won't come on until it has enough data points. And I have this software set. You can set it wherever you want for the Elliott wave algorithm to kick in at 377 data points. So as we get enough bars, then we can get the Elliott wave pattern. You can see that we're in a wave 4 right here. So we're still technically in a intraday 5 wave to the downside pattern, but awfully close to that 78.6% level. If the market can continue back to the upside, this pattern will become disqualified. No harm, no foul, and we start over. So we'll look at this again at the end of the session and see where we are. So let's go over and look at yesterday, and this is where I can show you that it was very similar to where we are today. So you can see the open yesterday, we traded down, we turned, rallied back to the upside, everything looked good till about 2 o'clock in the afternoon, and then boom, down to the downside. And during our live shows yesterday, I was talking about how the last hour of trade was going to be really important to see what was going on with the professional traders, what they had in mind. And they took the opportunity from the bounce yesterday to sell into the close. So then we continued lower. We actually had an intraday 5-wave pattern yesterday as well that went into the after hours market. And then here we are today trying to see if we can hang on. We just had another tick higher there. You can see now we're up to 77%. So cool thing about this software is the live intraday Elliott wave chart. So if you haven't gone by now to HUBB.com, HUBB.com, and gotten a copy of the software, do that now. The Elliott wave is free. The live Elliott wave is free. There's an opportunity for a subscription to the AI signals, which we'll talk more about later. But this part doesn't cost you a thing. So go to HUBB.com and get a copy of this software. A whole bunch of cool things, including the social media aspect, which Zack will come on a little bit later on towards the end of the show and show you how to get on the platform as we look to post a trading idea for today. Last week's was pretty darn good, wasn't it? We didn't post it as an actual idea because it didn't follow our trading rules, but we posted a downward bias on PLTR, and holy cow, didn't think it was going to do what it did, but it was certainly overbought, which goes into some of our other rules, which we'll cover when we take a look at that chart. You can see we just had another tick up. So now we're at 79% here. This is it. This is the last bastion. Any move higher from here, and this 5-wave intraday pattern becomes disqualified, and then perhaps we can have a little bit more of a move back to the upside. But as we move back to the daily chart, you can see that it doesn't really count yet where the S&P may go. The tech world is hoping Nvidia can save them. There's a lot of speculation on what Nvidia is going to say. They've been pretty strong in their guidance. They're going to have to be really strong in their guidance tomorrow in order to keep the tech rally alive, which I guess is already dead. So I would say revive the tech move to the upside. But the reason I said that, not so exciting about this bounce. It's nice to have this intraday bounce, but you can see on the low of the day down at 590, we were well below the 10-day moving average. So we were getting oversold. So we were ripe for a bounce. If we are not able to close back above this 50-day moving average, it seems like that could be a good short entry as we are just going back to test this 50-day moving average and then head lower. But we'll see where things close today. Again, the closing price, that last hour of trade, so important in technical analysis as far as where things could go. So that's where we sit at this point on the S&P. Let's go ahead and take a look at the bond market, see what's going on there. Then we'll bring up a chart of the VIX, see how that looks. And this is something that could be helping out the equities market, is this bounce up. Now, remember, this is TLT, so this is prices. Prices and yields move inversely. You've heard that a million times, but for those of you that are new watching, prices and yields move inversely. The TLT illustrates pricing in the 20-year. The TNX is yields on the 10-year. So the 20-year here, I like to look at because it's kind of, we've had this push and shove inverted yield curve for quite some time, then it uninverted, then it reinverted, and then it uninverted again. So waffling back and forth. It is unsettling when the bond market doesn't seem to be really clear on what's going on. A lot of thought, market analysis thought over the decades of the market that the bond market usually gets things right more liquidity in the bond market than there is in the equities market. A lot of very smart traders in the bond market. You don't have to be a bond market expert to be a good equities or derivatives on equities trader, i.e. options. But you should have a decent working knowledge of what the bond market is, because they are interrelated. And you can see this gap up here as prices are moving up. That means yields are going down. Now, normally, as I started this off, that would be very positive for the equities market, but not if it means that there's a rotation from equities to the bond market. So we've had a rotation out of big tech, but is it going elsewhere in the equities market? That would be healthy for the market. Broad-based rallies are solid. They tend to hold better. But if the money is leaving the equities market and moving into the bond market, which could be what's going on by this bounce up higher here in the bond market, then that's not positive for the equities, because we don't want more liquidity leaving the equities and moving into the bond market being viewed as a safe place to hide, especially now when we're still in a period of slightly higher interest rates. So bouncing up here today, and then we'll see if we come back down and fill this gap. If this wave 5 ends, I've talked about how this one's kind of in no man's land on the wave 5. It was a really well-formed 5-wave pattern to the downside on the TLT, with a wave 4 right at 50%. We had a perfect zigzag in the wave 3, and then the wave 5 extended right to the 100% level. So the rules are, if it goes past 100%, you only look for a 61.8% retracement once the 5-wave ends. If it goes less than that, you go all the way back to the previous 4. But what happens if you're a half percentage point above 100%? So it's kind of at a point where we could stop here at 61.8 or go all the way back. So it's not really clear where the next move would be on the TLT, but we'll need to keep an eye on that. And if today's move is any indication, there is some rotation definitely moving from equities into bonds. Let's go ahead and look at the TNX. I know you guys like to look at that, and you're going to see a very similar pattern, but the opposite direction, because remember, TNX is showing rates. Where we showed prices on TLT. So rates dropping on the 10-year. So the bond market is moving a little bit more in concert with each other, with the different durations kind of starting to move in the same direction. And this wave 5, right smack in the middle of the tap box, another great Elliott wave pattern in the bond market. And that's kind of a characteristic of Elliott wave. The more liquid the issue is that you're looking at with an Elliott wave pattern, the more accurate the Elliott wave is. And so when we're dealing with the bond market, tons of liquidity in the bond market, in the currency market as well. So the Elliott wave patterns tend to be pretty darn accurate. And we had another one here with this wave 4 just short of the 50% retracement level, the wave 5 right in the middle of the tap box. That stands for time and price projections. That gives you an idea of where the wave 5 is likely to go once we have a confirmed wave 5. And then we've gone through and had a corrective move. That's what it seems to lead us to the point where there is more to come in the bond market as far as prices going up and yields going down. Because if that ended at 84%, that would indicate a retracement back down to the previous 4. So heading back lower. So it looks like that's where we want to be in the bond market is long pricing, yields coming down. But as I said, that's not what we want for the equities market. If we go over and look at the VIX, not really too extreme. We did hit a high of 21, as you can see on the VIX today, backing off just a little bit. We have broken out of this big, huge trading range that we've been in the VIX. We've had these outlying spikes up, but then spending most of our time we had the range between 12.5 and 17.5, but we only visited 12.5 in December. We hadn't been there going back to early fall of last year. We've been kind of hovering in this 15 to 17.5 area on the VIX, so a little bit of a breakout. Now we need to find out, okay, is that it? Are we done with the VIX spike and things are going to calm down? and the VIX come back down, which would imply the equities market moving back to the upside? Or is 17.5 going to start to act as support? Old resistance becomes new support. We'll have to find that out over the next couple of trading days. By the end of the week, we should know where the VIX is going to go. But it is showing slightly elevated on the VIX, but there's no panic. So there's no panic sell-off at this point in time. So it could just be a standard healthy correction. The market doesn't go the same direction all the time. We go through ebbs and flows. We have impulses and corrections. That's the crux of what Elliott Wave analyzes, is the fact that's how the market moves. And so we are going to have corrective moves at certain points. Just the question is, how severe is the correction going to be? Could we bounce from here? There's a little tiny bit of support here, 590, but as you can see, it's in this, I call it a vacuum, when there's really nothing in the way here of moving all the way down to the previous 4. The move off the 4 up to the 5 went straight up until we got above 600. Then we went through that consolidating triangle, tried to break that wave 3 high, did it one day, last Wednesday, and then here we are back into this big trading range. But it would be quite easy for the market to move back down on the SPY to that previous wave 4. So look at the Dow, the DIA, see what's going on the Dow side of things. If I find it here, there we go. And you can see that we have the same similar pattern here, except for the wave 5 extended 125% on the Dow. Both were in a wave 5, but the wave 5 on the SPY barely took out the wave 3. The wave 5 on the DIA much higher here, up towards this 450 level. And then we consolidated here as well. Didn't really even get the 1 bar like we did on the SPY above resistance. So we weren't able to break 450. That was interesting in the fact that we had such a run last fall into the Dow. That was some rotation, speculation that was kind of defensive-minded traders moving into the Dow. The 30 largest companies, not quite as volatile as tech, the Qs, even the SPY, but that's the blue chip. So it's the next level of taking a broad view of the market. And then you get to the Qs and the IWM that are typically more volatile. And we're below the 50-day moving average here as well, but kind of trying to consolidate here. Also on the low of the day today, a little bit below the 10-day moving average. So we're right here at the 50-day moving average. So those two are similar. Can we get back above the 50-day moving average on the Dow as well? So the close, once again, as I mentioned yesterday, was important. It's important again today. It always is interesting to see what happens in the last hour. But when the market's in a pretty sustained uptrend or downtrend, you kind of have an idea what the last hour is going to be. But when you have these points where we're not sure what's going on, it tends to be even more important to watch that last hour. Look at the Qs. Now, this is interesting to me with that big bounce up in prices and the move down in yields today. You would think that'd be really supportive for the Qs. Typically, they like lower rates, the tech sector. But when you have this kind of selling in the market, even though it feels really bad, as you look at the technical charts, it's just kind of status quo on what's supposed to happen. But it feels a lot worse than what it really is from a technical standpoint. But if we were in a healthier market with yields dropping like that, you would think that we would have a stronger bid under the Qs. But no, moving down. And that's where Zack's comment on Nvidia. Can Nvidia save not just the tech sector, but the Qs, and a lot of pressure on Nvidia's earnings as far as where we go from here. So we'll have to wait and see. We'll know after hours tomorrow what happens with Nvidia. The positive here on the Qs is that we are at an area that could hold if we are going to try to hold. So we had the Qs very similar to the SPY chart, where we barely took out that wave 3 from December and then moving back down. So those charts are almost identical, the Dow so far being the outlier, and then the IWM that I'm going to show you in a minute, quite different as well. So can we hold this 510 level we're awfully close to where the previous wave 4 is. And the only reason I think we might hold this, at least for today, is once again, just like the S&P and the Dow on the lows of the day, pretty separated from the 10-day moving average, meaning that you're getting a little oversold. And when that happens, the path of least resistance is then back to the upside. And it doesn't mean that the selling is over. It just means short term, we got a little bit oversold. And so a bounce can come in, sellers taking a break. Some of the early sellers getting a little tired with the moves down, and that's why that path of least resistance is back to the upside. But once again, not back above the 50-day moving average. So we're looking to see as the SPY, the Dow, and the Qs going to be able to get back above their 50-day moving averages. They may not make it today into the close, but we'll have to wait and see tomorrow. I don't know that we're going to get a whole lot of action out of the Qs unless there's a lot of speculation as far as where we may go with Nvidia's earnings. Other than that, we're just going to have to wait and see what comes out of that. So let's look at the IWM. There was some talk on the financial networks this morning that there could be some more pain. Quite a different pattern on the IWM than we have on the other markets, where the other markets are in some sort of a pattern as far as movement to the upside with a little bit of a correction going on. The IWM has now labeled into a full-blown 5-wave pattern to the downside. So it wasn't like this. We were in this sideways range, but we have now labeled a 5-wave to the downside pattern here on the IWM. Once again, on the low of the day, a little below the 10-day moving average. We haven't rallied quite as much on the IWM in the last couple of hours as we have in the other markets. Still a little bit oversold on the IWM. Bounce back up to 220 could be a good aggressive entry to the downside for the IWM to see if we head down here. I think it's quite interesting that this 5-wave pattern that labeled the midpoint of the tap box is right down here at support at 205. So you have a support line that we bounced off of back in September, right smack in the middle of the tap box. It seems logical that the IWM may want to make a move down there. And that's also interesting. Same kind of thing as we were talking about with the Qs. Normally, small caps like lower rates. That's ideal. And we've been the whole dissertation as to why that is. But the IWM is the most sensitive, I would argue, even more than the Qs of all the markets as far as their tie to interest rates. And the fact that rates are going down and pretty significantly down today, and yet we're selling again on the IWM. We are a little bit lower at this moment, but I don't know that we'll see too much more to the downside today into the close, because we're still oversold from the 10-day moving average, even a little bit more oversold than we are on the other markets. So I think the market rarely gives you the ideal scenarios. I talk about this a lot, but a good aggressive entry again for the downside would be a bounce back to 220. We may get that, we may not, but perhaps we kind of level off here on the selling today, and then we reset and see what happens tomorrow. I don't know that Nvidia is going to help the small caps too much, but they seem destined for that 205 level on the IWM. So awful lot going on, lots to talk about. Let's get to metals, and then we'll look at energy. In fact, let's look at energy first. So the UNG right here in the wave 5 just finally got a nice tradable pattern on UNG after frustration for over a year, where the UNG seemed to be setting up into a pattern just to have it fall apart. But this one held very well. Kind of odd that it did it now. We're moving towards the end of winter time, which is normally when natural gas moves higher for heating, etc. The usage. We do have a pro-domestic administration coming in, production of energy, but we already have a lot of domestically produced natural gas. We have a lot of that in the U.S., so I'm not sure that policies there have too much to do with this. It's just interesting that the market normally looks 6 to 9 months ahead, and we waited till we started to see the end of winter on the horizon, and then that's when UNG chose to rally right up to 91%. So this could be it. This could be the end of the natural gas rally, and now we'll move into a corrective phase. Now, a corrective phase is one of three: flats, zigzags, or triangles. Either one of those could happen. So a flat would just be kind of a sideways consolidation here, a little bit down and back. After the wave 5, a zigzag would likely move it a bit lower, perhaps all the way back down to this previous 4, which is where it should go since we didn't quite make it to the 100% level. And then a triangle happens oftentimes after a wave 5, where you form a consolidating triangle as that market or security decides whether or not it wants to break higher and perhaps extend the wave 5, or break lower and move back to the previous 4 if the wave 5 was less than 100% extension. So just kind of interesting on natural gas. The timing seemed a bit, it's almost like they wore the longs out. So many times it looked like we were going to have a move higher only to watch it fail. You can see all of these attempts there, double top back last summer, and then the rally up. So perhaps if we duplicate last summer, we get a little bit of a sell-off now into early summer, and then maybe there's a little bit of a bounce as we get back to June. That would kind of play out, again, one of those scenarios that really makes sense, and the market doesn't always do what makes sense, but you could see an argument for, okay, natural gas moves lower now, we come back down towards the previous 4, and then maybe as we move into the summer, we get another little bounce in natural gas. We'll see. Oil, looking at the USO, you would imagine with some weakening economic data that would have an effect on oil. I'm not going to give my whole long dissertation on oil. You've heard it numerous times if you've been here. I feel like this big trading range is where we're going to spend a good amount of time with USO. The more production we make in the U.S., the less OPEC is going to produce. They've already said that. They echoed the speculation that I was talking about, months and months ago. They actually came out and said that, go ahead, drill, baby, drill. We're just going to cut our production. OPEC wants to keep prices elevated, but they have to be careful. You have to balance the supply demand. You don't want to get prices so high that they kill demand, push everybody into EVs more than already have gone. There was some interesting information on the EVs, getting a little bit of a sidebar here where we're talking about energy. They had commentary this morning on the financial networks on how people seem to be staying with their electric vehicles. The data is showing that once you switch from gas powered, if you will, to electric, people tend not to switch back. So I'll use the media's word here. It's been pretty sticky for those that have made the switch to electric, that they're not going back. Now, there's also been some speculation that maybe the initial run into electric vehicles is kind of waning a bit, and some of the stubborn people, myself included, that are staying with the old traditional gas-powered vehicles are reluctant to move. So it's not that there's been a continued surge into electric vehicles, but the people that have moved into them seem to be happy and not apt to switch back. So oil staying in this big trading range, I do think that this makes, again, a lot of sense. From a technical standpoint, forgetting my speculation, is the fact that we had this big triangle, we broke out. You know the rules by now. When you have a triangle breakout, you go back and test the point of the triangle breakout. Works the same way as gaps. You don't know how soon that's going to occur. Sometimes it happens rather quickly. It is here. Sometimes it takes a while, but normally you move back to that point. So we would be looking for 72.5 here on USO to satisfy that rule. And then we'll have to see what happens from there. Do we bounce? Do we continue down to support? That would be an area of kind of wait and see. On the low today, a little bit below the 10-day moving average, but staying right in this trading range. So been kind of pretty accurate on USO, I think, on what I've been opining for quite some time. Looking at gold, GLD, we're finally getting a little bit of a break in the rally. Pretty amazing rally out of GLD. Another fantastic symmetrical triangle. We had a strangle on this and at ewotrader.com. Probably got out just a little bit early here. We got out here and then it came back down, looked like great. And then we went a little bit higher, but still a great trade. At some point, this wave 3 has to end. But notice the coloring here. You can change these colors, but there's one color for when a wave is confirmed, and then there's a different color for when the wave is still active. The algorithm is not sure the wave is complete yet. So at this point in time, the algorithm is not sure we're done. This just could be a little bit of a pullback in gold. We'll see if we continue back down into creating the wave 4, then that 3 will turn purple, which is the coloring that I have for a confirmed wave. But we're not there yet. So a little bit of a pullback, a little backing and filling going on following this big, huge rally. That's very normal. You have a rally like that, no matter what it is, you need to stop and consolidate that move if you're going to try to move higher or if you're going to correct and come back down. So normal consolidation is warranted there. Let's see what SLV is doing. We had talked about, could it play catch up? And the answer was no. We can see that we moved up and we still have a very well-formed wave 5 to the downside. So it could be that on GLD, this wave 3 is over and we're going to come lower, creating the wave 4. And then SLV is moving from its 4, which barely stayed qualified at the 78.6% level, and then moving down. The algorithm thinks that wave 4 bounces over because you can see, unlike with GLD where the 3 was green, the 4 is purple. So the speculation is here by the algorithm is that wave 4 is done and we're going to be moving lower. Now, that would mean that both the metals, gold and silver, could likely be coming back down. GLD coming down to form its wave 4, SLV coming down to form its wave 5 in a 5-wave pattern to the downside. And then we could get the same thing. If SLV comes down and satisfies this, then you could get the bounce at the end of the 5-wave pattern, and GLD comes down, forms its wave 4, and then bounces higher in a wave 5. So even though the patterns are different, the movement setups are very similar, if that makes sense. Can we hold this 50-day moving average here on SLV? That's going to be the key if you're wanting to trade there. But it does look like at least a break now in the action for gold and silver. Silver did move higher, but as you can see, not to the significance that gold did. And we'll see if some point in time SLV plays full catch, maybe plays catch up on the way down. We'll see. But it does appear like it has a pretty well-formed 5-wave pattern lower there. You would want to see, if you wanted to be a little more cautious on a bearish trade on silver, is you would want to see the SLV break below that 50-day moving average. The 50-day moving average is the longer-term trend indicator, mid-term to long-term trend indicator. If it breaks below that with follow-through, then we probably are destined for 26 on the SLV. So pretty interesting how their movements are similar, not to the same degree, and not in the same Ellie wave patterns. Just kind of an interesting note there between the two metals. Now let's get to holy cow, what's going on with the crypto market. You heard about the hacking in Bitcoin, and that seemed to spook it a little bit. And we had that move down yesterday, and we're moving down again today. Now, very important level here on Bitcoin. So I wanted to highlight this pretty quickly. We have this support level here right in this area that's been the support for this trading range, even though we tightened the trading range between roughly 95 and 100,000. So it was a pretty tight trading range for quite some time, going back to post-election. And we hadn't really visited this area here around 87,000 since back in November of last year. And as you can see, this move on post-election, election night, we had a big rally here, and you can see how vertical we moved up on Bitcoin. The problem with that is that there's no resistance on the way back down to 70,000. So if we can't hold here, we can't hold this level of support at 87,000. We do have a wave 4 right at a fib level, 38.2, which could hold. We're a little bit oversold away from the 10-day moving average currently. So we could bounce here. This would be a logical point to bounce. And if we are unable to get a meaningful bounce, then there's a pretty good chance that we could see 70,000 again on Bitcoin, as there's just nothing to hold it. So really important, this level here at 87,000 on Bitcoin. We need to hold that unless we want to move back down towards that 70,000 level again. Perhaps the anticipation of the Trump administration buying Bitcoin or other cryptos for strategic reserves hasn't come to fruition yet. And who knows what the speculation is going on. But we had that hacking of Bitcoin, and that was what was able to break that 95,000 level, and then now further movement to the downside. Pardon me one second. So moving into Ethereum, as we take a look at more cryptos, you can see that the movement to the downside here is very similar. We never got the same bounce out of Ethereum that we did out of Bitcoin. And so now we're coming down. I drew a line down there at the wave 3, which is still active as well, which would be worrisome from the Ethereum folks. But we could break that level. We are at an area here, which is where I moved the line, which could hold as support in this area. If it does, then we could potentially move lower. And then taking a look at some of the other symbols that people like in the crypto land, XRP, which was the hot one for a while. We had this triangle. We broke down. We didn't quite make it back up to test the breakout point at $3. We'll eventually get back there at some point, but it could be a while now as we're breaking down towards this $2 level here, maybe even come down into, I don't like when the wave 4s are just these 1 bars, but coming down here towards $2, we'll see if that continues. And then also we have Solana, which is just seemingly following along with everything else with the consolidation. We broke the 161.8% extension on this zigzag that was back here in December. That was holding for a while, but we've broken below that. And now it seems like we're coming down a little bit lower here on Solana. We'll see if it can hold in this area or if it's going to break further as well. And you can see how important this level is on Solana. Look how long this area here has been active as support. We're getting awfully close to that. And if we break that, it's Zack. What would that be?
Katie barred the door. He must have felt it coming in the chat. You had Lisa and Will that were asking for it. That's too funny.
Yeah, good on you. Because, yeah, that would be a Katie bar the door if we don't hold somewhere close to this area on Solana. Now, before I start talking about the charts, we're going to talk about PLT. Did want to invite you, Zack, I think you put the link in the chat box. We're having an AI Trader Pro event that we would like to invite you to. So if you want to sign up for that, I think we're the leaders in using AI in trading. The HUBB organization has a data scientist. That's the subscription that I was talking about with AI here in the software. So if you're interested in that, you can click on the link, find out more about it. Love to have you join us for that event. We'll be talking about all things trading, AI, etc. It's going to be a fantastic event. If you're curious about it, you've heard about it. Our viewpoint and our commentary, which I believe is very spot on with where we are in the world of trading now. If you're not trading with AI, you're trading against it because others are moving into it. And you're at a good place here because we're one of the market leaders as far as having alert service, etc., utilizing AI. We have a lot of data. I think we have more historical data of actual alerts going out than pretty much anybody. So you're at a good place if you're interested in finding out more about it. So click on the link, look at it, sign up. I'd love to have you join us for that event coming up on tomorrow. So go ahead and click on that link. I think you'll find it very, very informative and maybe eye-opening as well. All right, so let's take a look at some stocks. I'm going to throw the dollar in here real quick. This is interesting too. I would have thought, it's same thing with rates. Rates going down, you think would be supportive to the market. The dollar coming down should be helpful moving into the next election cycle because we have this currency exchange rate. A few companies, not as many as I thought, but a few companies on the last earnings cycle did mention the exchange rate problem, the dollar getting so strong when you have international commerce. That goes right to margins. It goes right to the bottom line if you're paying more in the exchange rate. So the dollar coming down should soften that blow a little bit and be a little bit helpful. But same scenario, dollars coming down, rates are coming down, but yet the market's coming down as well. And so that makes you think that there's some concern maybe about the economy, about the amount of debt that we have. The tariff thing is getting kind of tired, I think, by now, even though the media loves to continue to talk about tariff issues. Zack coined the current term tariff tantrum when it first started, but by now the market has priced in concerns about that. I really don't think that's playing into it. It's great for media headlines, etc., talking points, but the market looks ahead. The market already has the tariff stuff priced in. When President Trump makes a comment about tariffs, etc., it gives you a short-term move. But from the longer term, that's all priced in, and news events tend to be short-term. The market processes way more than news. And when you have a black swan event or something that's unusual, yeah, that can be a little bit of an effect. But there's no surprise now on the fact that Trump is willing to enact tariffs. He's using them as leverage. He even said this yesterday. He's like, I'm a deal maker. That's what I do. And so why the fact that he was threatening tariffs and using them as leverage was a surprise to anyone. You just haven't been paying attention to what he was saying all through the election campaign, if that was surprising to you. But it did seem to surprise some people. But he's getting what he wants in a lot of areas. So he's used it pretty well. So the dollar coming down, the reason that it's coming down may be concerning, but the dollar coming down will help a bit in the next earnings cycle, even though we're still much higher in the dollar than where we were at the beginning of last quarter. So we'll see how that affects earnings. It may be the exact opposite. We may get to the point where we have a little bit of a break in the dollar, but it's not enough to help in the next earnings cycle. And that could be cited, the exchange rate issues during this big rally in the dollar affecting things. So I mentioned PLTR. I know somebody's going to ask about it if I don't show it. So I'm going to go ahead and show it here. So you take a look. And we had gotten overbought. So all of our rules here that we talk about, the things that I don't like, a gap up and a vertical move. I hate those. And what goes vertically up oftentimes comes vertically back down. So you can see clear indication of it there. We got too far from the 10-day moving average. And so back to the 10-day moving average, all the way back to the 50-day moving average. And we're basically right there to fill this gap up. So can Palantir find some footing here? Perhaps. We're in an area you could probably draw this line up here as far as the very tops of those two highs in December and the end of January as potential support, along with the 50-day moving average. So we could be about done correcting this overbought move here. But if you reacted to the post that we made during TradeFinder, that was our case study consideration for the week last week, you're a happy camper. expecting Palantir to go to the downside. It came lower than I thought. We were just talking about it maybe coming to 100. I didn't see it coming down this far. I thought we might just get back to at least this area. So you got a bit of a bonus there on breaking a little bit lower if you were short. And I know nobody wants to really be short Palantir. It's the market darling. It's taken over from Nvidia, that took over from SMCI. And, there's always this one that everybody loves. But maybe we're going to get a little bit of a break here. At some point in time, we're going to go back and fill this gap up here, but it could be ways away. You don't know, again, when the gap's going to get filled. We just know that there's a high probability the gap will get filled. But when is always the question on filling gaps. So we're awfully close here to a support area. So maybe it's time that Palantir can find a little bit of a bounce and move higher. But gosh, did we nail that one last week? Pretty spot on. So let's go ahead and take a few questions here, Zach, and then I'll come back and give you the symbol that we're going to look at for this week's case study consideration. And you can show the folks how to use the social media part of the platform to post that idea. So happy to take a couple questions right now. It looks like the market, while we get to the questions, I told you that we would come back and look. So real quickly, sorry, I didn't mean to interrupt you, Zach. I cued you and then interrupted you. But you can see it looked like, maybe we're going to head back down again like yesterday. Now, one more attempt. But we're getting into the exact same time frame that we sold off into the close yesterday. So can we hold this rally today or do we sell off into the close? It's unreal. It's almost like this is the exact same chart on the 3-minute side from yesterday. Does it stay that way into the close? That'll be interesting and something I'll be watching. So anyway, I apologize, Zach. Go ahead and let's grab a couple questions real quick here.
No worries. Sounds great. Yeah, we shall certainly find out on the SBY. A couple symbols from ERV85. First one's going to be AMD.
We're getting the old AMD again a lot. As we talked about, it was years ago. It was every single week, and then it disappeared with the Nvidia and everything else coming on. Now it's coming back, and it just continues to work its way lower. And we felt like if it didn't hold this 120, we're probably coming down to form the wave 5, which we have. We needed to hold 110 there, or we're coming down to 100. You can see the lines that we've drawn from the previous. That's another great thing about the software is when you look at a chart and you draw lines and you make your analysis, the software remembers it. It doesn't matter how long it's been since you brought the chart up. It remembers what you did last time, which is just really cool. So you don't have to continue to do that every single time you look at a chart. So it seems like 100 is destined for AMD. The problem is the wave 5 is even lower than that. So it'll be a question of, can we hold this 100 level? We could get a bounce there. I'm suspect on this wave 4 because it only went to the 23% fib level. If you read Elliott's works, he didn't really like that. He put it in the algorithm. That's why it's labeled a wave 4, because it's a fib level. And he was such a big believer in Fibonacci levels. But he was always suspect of it on whether or not that's a legit corrective move or just simply a bounce in a larger impulse move. In other words, this pattern is still susceptible to a relabel where that 5 could relabel to a 3, and then you get the wave 4 bounce. But it could hold and continue lower. We do seem destined to see 100 on AMD, and then we're just going to have to see if that can hold. If not, then yikes, we might be looking at 90 on AMD.
Very well. Next up, let's go over to Meta.
Oh gosh, we haven't looked at that one in a bit, and that's another popular one. Finally, the streak was broken, 20 consecutive up days, and now we've started a new streak. Now we're working on consecutive down days. That's kind of how things work, right? When you get to an extreme one way, you tend to go an extreme the other way. That's just how the market is. So that was extreme move to the upside. a little vertical here. The thing was, we never got too much separation from the 10-day moving average because it was just kind of this steady climb higher. Even though it was a bit vertical, it was just kind of slow, steady to the upside. And then, boom, back down we go. So overall, it was a vertical move. It just wasn't real vertical on a daily basis. And then here's that corrective move back down. We are holding the 50-day moving average at this moment. We have labeled the wave 4. We're right at this area here at the top of resistance from December and January. Will that now act as support on this wave 4? And could we turn and bounce? I think that's kind of likely here. The issue is that we've already had a pretty decent bounce today because on the low, once again, just like the market, just like the charts I was showing you in the market, we were a bit oversold from the 10-day moving average. So we got too oversold. Again, ripe for a move back to the upside, that path of least resistance that I mentioned earlier, and we'll see if we can continue back up towards the 10-day moving average if this wave 4 indeed holds. It's in an area we may need to go a little bit lower. We could even have to come down to 600 because there's more support there, but there is a little bit here, so maybe we bounce here and move back to the upside. On Meta. If you're super aggressively minded, you could take a shot at that at this point. But your stop would be if we break this level right here, and then unless you wanted to hang on all the way down to 600. So around the 635 level or so, if we broke that, we're probably coming down to 600. Perhaps a point where we could bounce more. Watch that 635 level on Meta.
Very well. A couple symbols from Manuel. First one's going to be LLY.
Eli Lilly. So that's a good question. Are we at a point now where these healthcare stocks have been so out of favor? Everything's away from defense, and healthcare is viewed as a defensive-minded sector. It ties in with when the aggressive stuff, the high beta stuff, starts to wane a bit in a market correction. The money rotates into things that are viewed as being a bit more defensive-minded, and those are sectors that we used to call the sin stocks: alcohol, tobacco, and gambling. Our vices, if you will, the things that people seem to continue to do no matter what's going on in the economy or how bad the economy is. We're going to find a way to use our vices. Healthcare, again, people need healthcare. So when you start to see a dent in the armor on the high beta stuff, it's a sector that you begin to look at. And we had this descending triangle. Thanks for asking, Manuel, about this one, because it's another rule that I talk about where I hate the information out on the internet that a descending triangle means a downside breakout. You've heard me say again and ad nauseum that no triangle gives you any directional bias. A descending triangle does not mean a downside breakout. Any triangle can break either direction. So here was a descending triangle with the upward breakout. Now, the problem here with Lilly is we're now all the way back up to resistance. So we're back up into this area here at 900 that acted as an area that we traded through congestion. I call it when you trade through a level, you go back and forth through the level. That's congestion. And that may be the end of the move. Could be a little bit higher because we have some room up to 950, but somewhere in this area between 9 and 950, I think we're going to stagnate a little bit on this rally in Eli Lilly. So the strongest part of that move is over, and we'll have to wait and see. Let's see what the DMI says on this. Still looks pretty strong, so maybe we do go up to 950, but I think it's going to have a hard time getting through that unless the market really falls apart. Nvidia disappoints, and then the whole tech thing is gone. You could see more money rotate into this, and perhaps that gives one more bid in this, but I would be a little more cautious now between 900 and 950. See this consolidation that we just went through here around 850? I think we could see that again here between 900 and 950, something very similar to this. And then if we can break 950, that big round number of 1,000 is just not very far away. But I think you're going to have some choppiness as we maybe chop a little bit higher here. So you have to be kind of patient on that on that move on Lilly. But yeah, it makes sense with what's going on in high tech land on that move there.
No doubt about that. Now it's your favorite Starbucks, SBUX.
Zack says that in jest, by the way. I have never understood this, why people pay so much money for a cup of coffee. Just don't understand it. I know all the fancy stuff they put in it and all, but black coffee with a splash of cream, that's all I want. I don't need all this stuff. So a dollar cup of coffee versus $10 or $15 just makes no sense to me. But anyway, I digress. Obviously, I'm in the minority because you can see what's happening with Starbucks. Now, from a business standpoint, they have gotten their act together and they've made some changes and they're obviously working. The bottom line looks a whole lot better. The balance sheet looks a whole lot better. And we're getting this renewed rally. And as much as I travel, there's Starbucks everywhere, every airport. You see them, piggybacking off of restaurants, etc. And there are always people in there. People are always standing in line to pay $10 for a cup of coffee. But we are in this tap box, so we might be maturing on this part of the rally here in Starbucks. And if we do move into further economic weakness, I'm not saying we're there yet. If we do move into further economic weakness, when you have to kind of tighten up the pocketbooks a little bit on spending, seems like this could be a luxury that may suffer a little bit. So getting awfully extended, we're almost at 100% extension. Very nice 5-wave LA wave pattern right here between 50 and 61.8 on the wave 4. You would expect 100% extension. We're pretty much there now. So I would be a little concerned about moving higher. I would think the likelihood is Starbucks goes into one of those corrective patterns, a flat zigzag or triangle in this area here. So just like we were talking about with maybe some choppiness and Eli Lilly, I think we could see that here on Starbucks as well. But pretty nice run, and kudos to them from a business standpoint of fixing what was becoming a problematic balance sheet. So they got rewarded for doing that, no doubt about it.
That's a fact. I see we are coming up with 2 minutes till the hour. We do have a lot of great, well thought and outstanding questions per usual from our informed and educated subscriber base. So, Rob, what do you think? How many more? And then we'll head over to the platform.
Let's do one or two more real quick, and then the top of the hour we'll switch over. So I'm making everybody wait for the for the symbol this week.
Keeping everyone in. Anxious in anticipation of that symbol. So let's go over to MSTR MicroStrategy for Yaya.
Gosh, they've got a double whammy against them right now. They went through and they increased their float significantly to leverage further. They've basically bet the entire company, Michael Saylor, on Bitcoin. They're more of a Bitcoin company than anything else now, crypto company. And they increased their float significantly, which that dilutes the value when you increase the outstanding shares, which they did significantly. So that's a problem for the stock to move higher. And then on top of that, we have that move down in Bitcoin. So you have Bitcoin moving down, and you have the increased float. So a double whammy there on MicroStrategy is causing this move, and it may not be over yet. Unless Bitcoin turns and rallies significantly, we are a tiny bit oversold at this moment on MicroStrategy. But you can see this little channel here back from October, and then obviously it took off on election night because it's so levered to Bitcoin. It had that big rally, consolidate into a triangle, and then consolidated into a larger triangle, the twin triangles. You don't see that very often. It does happen, but it doesn't happen very often. And now we're getting the breakout, and it's to the downside, unfortunately. Would not be surprised to see 200 on MicroStrategy. Maybe we can find some footing here, at least short term, because on today's selling, we're getting a little bit oversold. But gosh, if Bitcoin goes down to 70,000, you might see MicroStrategy back down here around 170 at that point. But I don't think it's going to be a straight move down. A little bit oversold here, but hard to see the bullish scenario for MicroStrategy at this point when you count in all aspects. So one more of Zack, and then we'll move to today's case study.
Sounds like a plan. We'll wrap up with AEG from Miguel.
Okay. Aegon, company that used to do a lot of business with back in my days when I was a financial advisor. Long time ago. But don't like that whole industry, but that's the way it goes. You move down with this big move lower here. We're getting a little bit of an oversold bounce. You could see where we are back on Friday on the selling on Friday. Too far from the 10-day moving average. Look at the 10 and 50-day moving average at the exact same spot. Maybe we make it back up there. I don't think we're going back up to fill this gap for a while. But with rates coming down, that will help the financial sector a little bit. And then maybe we can get a little bit more movement here. But for now, I think just leveling off in this area makes it, it seems like, Zach, it seems like every week we have some sort of a theme, right? Whether it's overbought, oversold, it's consolidating patterns that we're finding today, other than Bitcoin, et cetera. But a lot of patterns that seem like they need to do some sideways consolidation here, at least in the short term. We do have a little bit of resistance right here where we're trading at the moment. And if we can break that, maybe we get back up to the 10 and 50-day moving average. I would have a hard time going long here, even though rates coming down is supportive of that. The yield curve is supportive of that, this movement higher, but it's the Missouri. It has to show me, right? It's got to break above those levels. So I would watch this, and if we can get it back above the 10 and 50-day moving averages, then perhaps we go back and test 675. But we would need rates to stay down, and we would need the market not to fall apart. And if those two things can happen, then perhaps we can get a renewed bid here. But for now, I think you have to watch where we are now and the 10 and 50-day moving average. Other than that, I think it's likely to churn a bit through here. Just like the last several stocks that we've looked at. And it seems like that's been a common thing. All right, I won't wait any longer, but as I said, this is not going to be any sort of a big surprise. We are going to look at IWM with that 5-wave pattern to the downside, continuing lower. It's just too good of a pattern, noting that we could get a real short-term bounce here, but we're going to look at IWM moving down to 205. Is going to be our case study consideration for this week. Hope we can come somewhere even close. Then we had T-Mobile, that was a home run. We had Palantir, that was a home run. It's been a great month of February for our case study considerations here at TradeFinder. Let's see if we can keep it going. We had a good one with Apple, so it's been a home run month at TradeFinder. So let's see what we can do here. Maybe I just jinxed it with all that commentary there, but let's see what we can do here on IWM. So we will make that one an actual idea, Zach.
Sounds great. And no, you didn't jinx it, just created a challenge for yourself, which is always good in this world of trading. So we'll head over to the platform now. I'll show everyone how to post this official idea. As you mentioned, so as we can see here, I'm going to click on this light bulb for the ideas. As we can see, we have the ever-growing community and their ideas posted here on the platform. We're going to go to new idea and create an idea in comparison to the post that we did last week, which was basically a draft idea. The criteria just wasn't fully there to be an official idea like today. We are going to look for the symbol IWM. As we'll see, that came up, of a target price of 205. And what was the time frame again on that one, Rob?
Let's stay with the 3 months. Just the preloaded time frame there.
Very well. So as we'll see, we'll select the quarter or 3 months there, and we will come back and make this very shortly after this session is concluded. I am going to go ahead and post the idea though. So now it is available on the platform for you to come in and interact. We welcome your thoughts, whether you agree or disagree. You actually have the option. I'll click into it here so you can see now that it's published to physically agree. Well, since it's my idea, you can't see it. But for instance, if I were to click on someone else's idea, I can agree, disagree, and then of course you can add your supporting evidence here down here by commenting on the post itself. So again, we welcome your thoughts, whether you agree or disagree. Opposing opinions is what makes markets. Otherwise, there would be no trades out there, no open interest, and no options. So with that, I'll pass back over to you, Rob, to wrap things up. And thank you, as always, for an insightful session.
Yeah, a couple comments to finish things up. Great explanation there on the social media aspect. It's amazing to see it because it hasn't been around that long and has continued to grow. And it started literally from nothing, from scratch. And you can see the amount of people. And I get notifications as new people post ideas and add themselves to the platform, and it just is growing exponentially. I think it's going to be the place to be for social media revolving around trading, if it's not now, in the not too distant future. And then a quick reminder on that AI trading event tomorrow. So click on that link that Zach showed you so that we can all have a great visit with the view on future of trading AI. So with that, thanks as always for your attention, giving us some of your time during the trading day. One quick last look at the intraday because it's getting precariously close to falling through with what happened yesterday. So you can see we made a lower high. We're going to have to break that high from right when we started about 1 o'clock. If we're going to be able to not sell off again into the close, but getting awfully close to that occurring at this moment in time. So let's see what we can do moving into the close today. So watch that close. It's going to be key. Thanks again for your time. Have a great rest of your afternoon. Look forward to talking again soon. Take care, everybody.